Well, shares of Nvidia are moving higher today. OpenAI is demonstrating the capability of its latest version of ChatGPT, and of course, that's going to require the chips to power it. Nvidia certainly has wobbled over the past month, but it's getting pretty close to the all-time highs that it hit at the end of March. In fact, it's only about 5% away. Even with that recovery, our next guest is one of the more bearish analysts on Nvidia. His price target implies 30% downside. Let's bring in Gil Luria, senior software analyst at D.A. Davidson. Gil, you know, we always ask about this, and I always do an update. Are you sure? Are you still seeing some downside? So I'll ask again. Are you sure? Are you still seeing some downside?
Not in the short term.
Okay.
This year is going to be a great year. The quarter they're going to report next week is going to be fantastic. They're going to report more than $25 billion of revenue, which is more than they delivered in all of 2022, which isn't that long ago. So they're going to have a great result this quarter. They're going to have a great result this year. The reason we're not quite as bullish as everybody else is we're looking at the horizon. What's going to happen next year? What's going to happen in 2026? And we think there's accumulating more and more evidence that this can't continue. The market will take care of itself. Whenever one company extracts this much profit out of a market, competition does come in. And in Nvidia's case, it's coming in from its customers. Let's not forget, Nvidia generates most of its revenue from only 5 customers.
I want to unpack that part of it, but I imagine that the pushback that you get is, yeah, let's worry about that when the time comes. The stock's not trading on 2025. It's trading on next quarter, maybe, you know, year end. So why not just enjoy it while it lasts?
People are welcome to do that. That's not our approach. Our approach is to treat stocks as the sum of all their future cash flows discounted. And so this year matters more, but next year matters, the year after that matters, and every subsequent year. And so since our expectations are considerably lower than consensus expectations for those out years, our perspective is that there will be a day where revenue starts declining. And if nobody is expecting that, the stock would have significant downside if that was to happen.
You mentioned that a source of that could come from their customers who become competitors. Help us understand where they are in that sort of journey and when real competitive threats start to emerge.
So all the 5 top customers, Microsoft, Amazon, Google, Meta, and Tesla, which represent more than half the revenue, maybe even close to 2/3 of the revenue, all of them have their own chips. All of them have their own AI chips already. And it's just a matter of how quickly are they going to deploy them and for what purposes. So it is possible that NVIDIA GPUs, since they are the gold-plated Ferrari, will continue to serve for training the largest models, the models that are there in order to achieve artificial general intelligence. And that could persist. But for inferencing, how we use these models, that is increasingly moving to those companies' own chips. Meta has already said they do inferencing on their own chips. Google does inferencing on their own chips. Amazon does. It's just that there's so much demand that they need as many NVIDIA GPUs as they can get, plus their own chips. Once they can catch up to demand, the demand for all these chips, but mostly for NVIDIA GPUs, which are considerably more expensive, could moderate.
And inferencing, of course, is really just running the model once it's already learned everything, right? It's just kind of keeping the car running. What about, you know, I'm thinking about comments that the CEO has made in the past about the wave that needs to come. And I hear your point that right now it's being driven by the hyperscalers, but that basically every piece of hardware needs to be updated as AI eats the world. Doesn't that suggest that the market is large beyond these 5 customers?
Well, the spend is by these large customers. If you're a bull on NVIDIA, one of the things you believe is that even when these 5 large customers feel like they have enough and don't need to buy anymore, demand will be picked up by other participants, other companies, other governments. And that is possible. It's just that we've seen very limited evidence of that so far. Even the largest software companies are just using capacity from the hyperscalers. They're not buying their own GPUs. And so unless that changes in a really dramatic way and the customer base dramatically expands over the next couple of years, the customer base is still those 5 companies.
Right now, the stock, and I know the multiple kind of moves around depending on what's happened in the most recent quarter, but let's use the forward consensus multiple is 35 times for a business that's expected to triple in the next quarter and double in the quarter after that. You're only paying 35 times for a business that is expected to do that, and to do that at significant profitability. Your price target is 600. Help me understand the math around how you're getting there, because that implies that the stock, which seems cheap considering the growth rate, should be even cheaper.
Well, the math is actually quite straightforward. My estimate for 2026 is a third lower than it is now, not 50% higher, which is what consensus has.
And that's I guess, when you expect competition to show up.
Sometime between now and then, yes.
So then what is your preferred play in AI?
Amazon. Amazon is buying Nvidia chips. It has its own chips. It has the largest customer base for its hyperscaler operation. That operation accelerated last quarter beyond the acceleration from AI. And as Amazon's capabilities in AI catch up to Azure, which is the leader right now, Amazon can offer it to a larger installed base and have even more upside as those customers start using those tools to build their own applications. And that's recurring revenue. If their customers start using these tools and providing valuable services and tools, that's a perpetuity or an annuity for Amazon. It's not a one-time sales. That's the distinction from Nvidia. And as we sit here today, Nvidia's $100 billion business is worth more than all of Amazon, which includes a $100 billion hyperscaler business. I'm not sure that makes sense.